After my last Novated Lease video, the most common comment was really around the actual numbers and seeing if it's something that I could do to go through some real numbers. So that's exactly what we're going to do today. I've taken the time to go and source an actual quote from a reputable Novated Lease provider. And what we're going to look at is how that might affect your take-home pay and compare whether, say, a standard car loan or using cash savings or mortgage redraw would be the best option, and how it actually stacks up. So I'll try and give you a simple way to think about it, some questions that you might be able to ask yourself, because as with any financial decision, every person's situation is going to be different. What's up guys, my name is Mitch and I'm closing in on 40 years old. I've spent the last couple of decades around finance, investing, and trying to build wealth for my family. I'm not a finance guru or anything like that. I'm just sharing things I'm currently learning or things that I've already learned. And if it helps other people avoid a mistake or gives them a different perspective, then I've done my job, and that is what this channel seeks to do. Guys, a quick note before we do get into it. Everything I do talk about here is general information only and should not be considered financial advice. I'm sharing my own experience in looking through the figures that I've gathered. And these numbers, they don't represent my individual situation, and that therefore they probably don't represent every other person's individual situation either. The figures do make some assumptions that won't apply to everyone, and at the end of the day, as with any financial decision, you should speak to a trusted financial advisor or an accountant before you go and make any of these decisions, especially around financing a large purchase such as a car. All right, so let's get into it. For anyone who has seen the first video, you can skip ahead, but for anyone new, here's a quick 20-second overview of what a novated lease is. So it is a three-way agreement between yourself, your employer, and a finance company. The finance company buys the car, your employer makes the payments, and you repay them through your salary before tax. The pre-tax payment is what lowers your taxable income and gives you the potential tax savings. There is a post-tax portion, as we'll find out as we go through here. But that's really just it. So let's take a look at the numbers and what it actually means in dollars. All right, so I went and got a quote from a reputable novated lease provider. It was on a reasonably priced small SUV that was around $37,500 for the car itself. Once we added some interior protection, exterior protection, dealer delivery, stamp duty, rego, all those sorts of things, on road it was $43,000. Now that amount would come down to $39,574, which was actually financed on the lease with an interest rate of 9.6% over a 4-year term. End of the loan, balloon payment of $14,384, and that was excluding GST. Now on a $100,000 a year gross salary, the monthly deduction pre-tax came in at $594, and then a post-tax, what they call employee contribution method, which eliminates fringe benefits, came in at $689. So you're paying a larger portion out of your post-tax income. The total out of your pay each month, $1,283. So that is going to cover the lease payment. It's going to cover the cost of running the vehicle. So fuel, insurance, registration renewals, servicing, management fee for the actual novated lease, everything bundled in. So the key question is though, what does that actually do for your take-home pay? Now to actually compare this, I wanted to do it versus a standard car loan. One of the largest banks in Australia, or if not the largest bank, Commonwealth, advertises a headline rate of 6.29% at the time of recording this. So I haven't taken the absolute lowest rate they provide. Some people may not be eligible for this. So I've just gone in at 6.99 on a fixed rate car loan for a fair comparison. Now I'll jump down to a table which is going to help compare the two and what they actually do when it comes to your take-home pay. Okay, so to compare these, let's just have a look at this table, which is going to make it a little easier with all of the numbers. So our salary at $100,000 gross per year means $8,333 is going to be our monthly pre-tax pay, leaving us with an after-tax salary of $6,434 per month, and that's under the standard option where we're just using a car loan to fund the vehicle. Now, out of that after-tax pay, we're going to have to pay every single cost of the vehicle. That includes the loan repayment and all of the running costs, and that's going to mean that after they're deducted, we have a take-home pay of effectively $5,184 per month. Now with the novated lease, we're going to have the pre-tax deduction, which is going to leave us with a lower taxable income, and therefore we're going to pay a little bit less tax each month. And our after-tax salary with the novated lease is going to be $6,030 per month. And yes, you'll notice that is lower, but we have to remember that because we've already paid a portion of it, we only have a small portion to pay out of our after-tax money, and that's $689 of mainly running costs. So our effective take-home pay with this factored in is $5,342 per month, leaving us with about a surplus of $158. So we're a little bit better off each month with the novated lease scenario. So on a $100,000 a year salary against a car loan at 6.99%, the novated lease is about $158 a month better off, which equates to $1,900 a year or $7,500 over the 4-year term of the lease. Now, no denying it, that is a meaningful saving, but I wouldn't say it's as dramatic as what the marketing and some of the novated lease companies do make it out to be. A note on this, that every situation and comparison is going to be different. Now, Commonwealth Bank is fairly sharp when it comes to their headline interest rates, and I feel like the novated lease company that I've approached here has provided quite a competitive rate in the grand scheme of novated leasing, and I think some of the providers are a little bit higher than that. So your situation, the outcome may vary drastically depending on what the difference is between the car loan rate available or your mortgage rate and the novated lease. The other thing to remember is that the outcome will also vary greatly depending on what your salary is. So the higher the salary, obviously this may then have a greater effect, especially if you're closer to one of the tax thresholds. And lower salaries, the outcome could be very different and a lot less than what this might show. Now, we can't forget about the other option. So paying cash or savings for a new vehicle. I want to be clear about this comparison because a lot of people say they're paying cash, but for the majority of us, we're homeowners with a mortgage. So to me, paying cash doesn't necessarily mean you're just getting it at no extra cost. There is the opportunity cost that would come with otherwise leaving that cash against your mortgage in your offset account. So if you've got $40,000 sitting in the home loan in the offset, then that's effectively reducing your interest payable. And let's call it, say, a 6.5% interest rate. Every single day it sits there. Once you actually pull this out of the mortgage to pay for the car, it's no longer ensuring that you're not paying interest on that $40,000. Now, the cash or mortgage offset option is genuinely competitive when you consider the interest rates on mortgages are lower at the moment than what you would have on a car loan or a novated lease. And that's only really the case if you can replenish that money quickly, because what you don't want is to fall into the trap of taking that $40,000 out and then just starting to pay the new minimum on your mortgage. You then would be paying the car off effectively over a period of whatever's left on your mortgage. And that could be 25, 30 years for some people. The other trade-off is that that $40,000 is then no longer available for you if something does go wrong. So it could be your emergency fund that you've just spent and you've lost your job, or a family health scare comes up, whatever the issue may be. So there really isn't a right answer here. And that's what we're going to get into when it comes to what is the right way. I think you need to look at it from a more than just dollar value perspective, because there are some risks that we will get into. So before we move on to the risks, really just to recap, with the novated lease, some things are you don't have a huge amount of flexibility. So we're financing the full value of the vehicle. We have a balloon payment at the end, and you've got obviously a higher interest rate than might be otherwise available. With a car loan, you have full flexibility. So you can put some deposit in, you can take a balloon at the end if you wish to, but if you don't, then you don't have to have one. And what a lot of people don't know is that a residual at the end actually means that the whole cost of the loan is actually a lot higher, because whilst you're not amortizing that balloon figure and you're paying smaller principal amounts, you're going to be paying interest on that whole amount at the end of the loan. Now, the home loan or paying cash, really that's full flexibility. The only thing really that you're losing out on is that you don't have that liquidity available to, I guess, make other financial decisions if that's what you're wanting to do, expand your investments or to offset your mortgage, things like this. Now, Some of the big risks, the major one is just employment risk. So, the government is a huge one that takes out novated leases, and they're probably the more stable of the options. But if you're in a company where you might otherwise be leaving that company in years to come, or they're the sort of place that has projects that you move on from, or just a more transient workforce, then it might not be the best option for you, because not every employer that you go to is going to just easily take on your novated lease, and therefore you may be left paying for it without all the benefits that come with the salary packaging side of things. The other risk is the balloon payment. So if you make the right decision when you buy a car, this may not come up as a big issue, but a lot of people don't make the right decision when it comes to buying a car. They buy with their emotion, and then that car decision may end up biting you in 3 or 4 years to come. Now, the balloon payment is a real obligation. So if you do hand the car back, the novated leasing company will sell that car, and I can tell you they're not going to try and sell it to get the absolute most from it, and that may actually leave you with a shortfall. You are, as some people may not know, liable for covering that shortfall that may come from selling the vehicle if it does not cover the balloon payment. The other risk, the interest rate. So obviously if you do lose your job, or you leave and you then no longer have that lease being taken care of with pre-tax income, you may then be out of pocket an extra amount of money if you would have otherwise had just a standard car loan and then had the same situation occur. The higher interest rate may be a larger gap than what we had, as I discussed earlier, and then this means that you end up paying more for the vehicle overall. Now, one other caveat here is the EV and a novated lease being paired with that. I'm going to say that it probably deserves its own video because the numbers are just so different when you compare taking a novated lease on an EV versus one of the standard type vehicles that we've done here today. So what is the verdict? And here's my honest take. So comparing against a car loan at 6.99%, the novated lease does save you that $158 a month, and that's on a $100,000 a year salary. $7,500 over 4 years, that is a real saving, and I'm not dismissing it in any way. But I will say it's not like some sort of great magic trick to helping you save all this tax. And the comparison starts to get tighter and tighter if you have a disparity in the interest rates. So we only compared sort of a 2.5% to 3% difference. If that then gets wider, the difference becomes far less again. And then even different when you're comparing it with the paying with your cash or your mortgage. So I think I did say this at the start, but everyone's situation is going to be so different, and the right decision is going to be very different for each different family. So you need to take your own circumstance into consideration, and go through these things. Make sure you do get the numbers, make sure you understand what the interest rate is on your lease. Don't just get the figures and think, I'm going to save this money, I'm going to have a larger take-home pay. It's not really how it works, because I think at the end of the day, with such a large purchase, you need to take your whole situation into consideration. Job stability, all those things we went through. But hopefully this video has sort of given you at least some better questions to ask when it comes time for deciding on that, or going through a lease quote when you're speaking with your novated lease provider, or speaking with your spouse when it comes to deciding on one of these options.